Hi, this is James Shug with Westpac London's end of day report for Tuesday the 7th of August. Well, it was another positive day on equity markets today with nothing much really seemingly driving it. We had some earnings reports beat analyst estimates. Xstrata was one here in the UK. We had Chesapeake Energy in the US. Economic data was fairly thin on the ground. I'll just run through some of the key pieces. Italian economic growth, GDP, was down 0.7% in the second quarter. That's the first of the major European economies to report. We get the most of the rest of them next week, including the Euroland aggregate, which incidentally we also expect to show a 0.7% decline for the second quarter. That's for Euroland as a whole. We had UK industrial production down 2.5% in June. That was actually less than expected. There were 2 extra public holidays in June because of the Queen's Jubilee, and also the weather was particularly bad. Factors that would tend to weigh down against the performance of the industrial sector. The statistician had assumed a weaker outcome when calculating the first estimate of UK GDP for the second quarter. It was also reported down 0.7%, but it's been indicated that we'll likely see somewhat of an upward revision there of around 0.1 of a percentage point on the basis of those industrial numbers alone. It's still the underlying story in the UK is weak, and that's still the third quarter of decline in economic activity, but an upward revision in prospect. No other significant data really. Oh yeah, factory orders in Germany, sorry, down 1.7% in June, now running close to an 8% annual pace of decline. The orders from the rest of Europe down almost 20% over the year, although the other foreign orders and also domestic orders are also running negative annual paces there. So Germany is really no longer the engine of European growth as it was not so long ago. No big data to report in the US, although the Boston Fed President Rosengren said today that he thinks the Fed should pursue an open-ended quantitative easing policy of substantial magnitude, with policy guidance set with respect to economic targets like an unemployment rate, for example. And also the focus of the Fed's purchases should be shifted from treasuries to mortgage-backed securities. I mean, that's seen as quite a likely scenario for the Fed when they meet next on September 13. The only other story of note is the Standard Chartered issue. In the US, they've been probed in relation to money laundering and Iranian banking. Now it's hit the share price particularly badly, down another 17% today on top of a steep loss yesterday. So that's one of the reasons why the London market actually didn't benefit or participate fully in the gains seen elsewhere today. So the FTSE is up just 0.1%, just heading into the close. It's already after 4:30 on Tuesday afternoon. But the French market up 1.25%, the German market up 0.4%, and the Spanish and Italian markets both up almost 2% today. The Dow in the US is up about 0.5% at the moment. It's at 13,179. And as I say, really the Chesapeake earnings result, positive sentiment in other equity markets, and the Rosengren comments probably the main factors at play there. In the commodity markets, we've got gold down 0.25% today at $1,612 an ounce. Oil's up 1% at $93.16 a barrel, and copper prices up 1.4% today. The Aussie dollar, at the start of the day here in London, it was at just above 1.06 or $1.06 US cents. That's its highest for 4 months, although it's come off a little bit since then, and it's at 1.056 at the moment. We had the Reserve Bank leave rates unchanged in Australia. A few little tweaks to the statement that could keep alive the prospect for rate cuts down the track, but clearly not their intention to cut rates in the short term again. The focus on Australian markets today will be on housing finance figures, which are out at 11:30 Sydney time. And that's it from me today. I'll be back tomorrow.